Hello and welcome to Shift Happens. We have a very special episode today, and we're going to talk about digital transformation from a completely different lens, the lens of an investor. I'm here with none other than Craig Hanson himself, the co-founder and the general partner of NextWorld Capital. Craig, welcome to the show.
Thank you very much.
NextWorld Capital isn't just trying to replicate the venture capitalism of the past, they're actually serving as a platform for some of the most successful companies today. Craig, you sit on the board of great companies like Good Data, Zuora, Aviso. Tell us a little bit about your role here at NextWorld and also how you interact as an advisor and a board member for some of these portfolio companies.
Sure. So we focus on leading enterprise tech companies and come in as an investor, typically at the early revenue stage. And then importantly, then we run them through the global enterprise platform, which is our partnership with over 100 of the largest global corporates and the C-level executives in those institutions to help these companies grow and to bring together really the most exciting new startups that are innovating in different spaces, growing into their own global leaders, and these largest global corporates that want to be partners, customers, or go-to-market channels with them.
Got it. And how long have you been here at NextWorld, or when you started it?
Since the beginning, since we co-founded it and brought it together. So since then it's grown pretty tremendously, and I think we have well over 100 of these large global corporates we work with now, and a number of successful companies like Zuora that we've worked with over the years and really helped them on that spectrum as they've grown into global leaders themselves.
That's fantastic. So you serve as an advisor for a lot of these companies, probably a lot of the large enterprise companies, but also a good mix with the smaller disrupting companies that are doing really well, especially in the Silicon Valley. How has your role as an advisor changed as you've seen companies go through digital transformations, adopt new business models like the recurring revenue model? How has your role as an advisor changed?
Yeah. Even within the last 5 years, certainly 10 years, there's been a tremendous increase in the corporate interest in what's going on in Silicon Valley and the US enterprise tech ecosystem in particular. And importantly, it's not just about tech innovation and tech solutions adoption anymore. Before, it was primarily about what's the new technology I should purchase or integrate into my enterprise. A lot of these corporates now, within the last few years, are realizing it's about more than just tech adoption. It's about, in many cases, business model transformation. It's an entirely new way of how do I engage with my customers and think about them. And I think they're recognizing this wholesale shift in how customers want to buy from them, how do customers want to engage with them or be serviced by them, and really how they can run their business. So you're getting into this whole idea of transformation. It's not just digital adoption, it's digital transformation. And you're starting to now see enough exciting, successful examples of companies that have done super well with this. Salesforce was an early example, but even transformed companies like Adobe, Netflix, and others. And so those case studies are really resonating amongst large enterprises, and you see it really opening their minds into what they're looking for, how they want to engage with, and learn from new companies that are innovating on the technology side or on the business partnership side.
Yeah, I really like how you talked about putting the customer as the central focal point, right? We've seen the world move from product-centric, creating the best product, to really serving the customer. So I really enjoyed that. Tell us a little bit, well, let's get into the real exciting stuff. Let's get to the money part, right? As an investor, how do you pick valuations for these companies now that you've seen companies go and digitally transform? Has that changed significantly? How do you evaluate companies in a public sector or a public market versus a private market? And how has this move to recurring revenue or customer-centric models really changed the way you go and invest?
Yeah. Well, on the venture capital side, it's almost entirely subscription-based models now. It's really rare and kind of unheard of to be investing in non-recurring revenue companies whenever possible. So it's gone from being an exception case to being the vast majority, where you would really have to think hard about just doing a one-time product sale company. Right. Because we've evolved so much in Silicon Valley in this shift from recognizing that it's such a better way to run your business. Not only as an operations side, do you as a company get more predictability and sustainability in your revenue, but you get more data and insights into driving your business. But it's also recognizing the front end, it's recognizing the consumer side of this, and customers have just changed entirely how they want to buy, engage, or be serviced by you. And the subscription models just fit that much better. So from the venture capital side, as we're investing new money into the companies that we think will be the global leaders of tomorrow, the subscription economy is where it's at. That's the heart of the model. Interestingly, you're also seeing this shift now within the last few years on the very large enterprises, traditional companies, publicly traded companies, where now pretty routinely subscription model companies are valued 2 to 3x higher than one-time transaction sale companies in the public markets, even in these large traditional industries. So companies see that. And there's this huge imperative across all of these industry verticals of companies trying to push whatever lines of business they can into recurring revenue models. Certainly for anything new that they're launching, they want to do a subscription model. Wherever they can, they're trying to add insights or services or product models that are on a subscription model basis. And in a lot of cases, companies are looking at how do they wholesale transform their business model into a subscription platform for all the reasons that I mentioned. There's initial pain in doing that. There is that transformation part, and that's sometimes not easy. But we've reached, I think, a point in the adoption curve where doing that switch is now more mainstream. It's not the exception. So if you're not making that kind of transformation, you better have some really good reasons why not. Because otherwise, you're probably not setting up your company's platform for the next 50 years of growth.
Right, and I think that's a perfect segment to something that our CEO talks about quite a bit, and he wrote a chapter around that in his new book, Subscribe, which has recently become an Amazon bestseller, and he talks about swallowing the fish. Yeah. And it's basically these enterprise companies that are talking to investors, letting their investors know that they might see a potential dip in their revenues as they go through the subscription transformation. And the companies that have successfully been able to communicate that to investors and come out on top on the other side are typically the ones that are pretty successful in doing that. Yeah. Can you tell us a little bit about your specific thoughts in the large sort of enterprise world?
Yeah, I think that the idea of swallowing the fish, or in essence, taking on the cost structure, the transformation to enable this type of platform switch, but also recognizing that your revenue goes down from the one-time product sales as you build up the recurring revenue stream. That whole concept has gone from a peripheral idea 5-10 years ago to now one that I think is fully embraced and mainstream and expected, valued, and in some cases demanded by Wall Street and the other public markets. So I don't think enterprises are going out on an edge to try to swallow the fish now. I think public market investors, particularly the long-term stable kinds that you want, expect and look for that type of shift. Yeah. If you're not making that type of shift to a model that is more sustainable, more predictable, better competitive advantage in serving your customers, then are you really setting up your company best for the long run? And that's an investor risk. That's an investor red flag. So I think that has changed. You know, it's gone from a cost that I may have to incur to this is really a business imperative now. Subscription model transformation is a business imperative for a lot of these companies. And as much as possible, we're seeing some of the best forward-thinking leaders at these very large traditional enterprises thinking about how do they move there as much as possible and as soon as possible.
Yeah, it's really interesting to get an investor's perspective on that, right? Because from the other side, there's different lenses on this, so it's exciting to hear that.
Yeah, I mean, from an investor's perspective, you're looking for not just what do the next couple of quarters provide, you know, whether it was a private company like the years when we were working with Zuora, or a large public company like some of the top Fortune 10 names that you know of. Sure. You're really looking at what are the next several years of growth. And so am I building the right platform in the way that I build and iterate and dynamically improve my product in the way that I service these customers and gain insights into what they really want and need to grow over time, and then I expand that relationship to serve them, that's just an entirely different platform to be able to grow with these customers over time. And the companies that will be still on that Fortune 500 list 10, 25, 50 years from now are the ones who are going to adopt that platform. And if you don't, maybe you have shorter term, higher revenue, but you're eroding your competitive base.
Right. So you probably meet with a lot of CEOs and founders that are kind of struggling through a lot of these different things as they go and try to transform. And it's obviously not easy to transform these large businesses because, as I always talk about, there's a change that's needed on people, process, and technology. Can you share your perspective of what do you think is the single most biggest struggle in the industry for business transformation for large companies?
Yeah. I think there are a couple of things that a lot of these large enterprises are facing now. One is what we've been talking about, which is recognizing in your customer base, be they businesses or individual consumers, how they want to engage, how they want to be serviced by you, how they want that relationship to grow. And then suiting your product or your service in an ongoing relationship way, which is usually a subscription model, to meet that demand. As opposed to the flip side of that, which is I produce my product or my box or my service and I push it out, and this is the way that I want to do it. So whether or not you're a news service or an automotive company or entertainment or financial services, how do my customers want to engage with me and grow, and how are they looking to buy and be serviced by that? So one is really just going through that thoughtful process. I think the second large challenge, I think, for a lot of these enterprises is that the disruptions to their existing lines of business are happening much faster than they used to. It used to be if you were a large enterprise and you built up a great brand and a great product, you had some sustainable competitive advantage for a number of years before somebody could possibly produce a better product or service your customers better or grow better. The disruption waves are happening much, much faster now. Consumers and businesses are much more facile at switching between competitors. They're smarter, they're better informed, they're looking for that right level of engagement. So if you're not serving them the right way that they want to be engaged, and you're just trying to push your product or your model to them, they're going to switch. And so large, established, traditional companies can feel threatened very quickly by these new disruptive waves. So you're constantly looking at how do we reinvent and reimagine how we're serving customers, the kind of product that we're building, the kind of service that we're providing. And that requires everyone to just be thinking much more innovatively and much more fastly in terms of how they're going to adapt to those changes.
So you've invested in a lot of subscription-focused companies like Honeycomb, Gong, and Zuora. What draws you to some of these companies as an initial investment? And furthermore, what draws you to continue to stay invested rather than cash out early?
Yeah. As a VC investor, you're looking for these great ideas, great teams that have big potential to go forth. So you're looking for some innovation in technology or product or model that is going to be able to transform the type of value that you're able to deliver to customers. And then the right exceptional team to be able to execute on it. In the enterprise tech space, that can happen in a variety of ways. Occasionally, you're able to find companies like Zuora where you've not only got this great technology, this great team, but it's really unlocking something broader. It's part of this big seismic shift. And those are the amazing opportunities to be a part of as an investor, where you're looking for this massive wave that can occur 10, 20 years plus in duration. So in essence, to use a California analogy, you're looking for a great surfer and a really, really big wave.
Well, I love it. Craig, thank you so much for sharing your experience with us today and all the lessons around how an investor can actually look and penetrate an evaluation of a really large enterprise, specifically to this digital transformation. we can't end the episode without you leaving one call to action for our viewers, something that they can go back, immediately implement in their journey towards digital transformation. So all yours.
Sure. So I'd say a couple of things. One, gather your team and think creatively and open-mindedly about the new ways that you can learn from how your customers want to engage with you, how they want to buy your product or service, and how you can transform the business operations itself. And I think you'll come up with some really exciting ideas. It's less about threats of disruption and really about these opportunities to re-platform for the next phase of your company's growth. Second, I would read Tian's book, Subscribed. We have given copies of this to the C-level execs at all of our enterprise partner companies. It's a great guide and thoughtful piece on how you can architect not just technology change, but really it's a business level transformation story.
Well, Craig, thank you for that. I think that was super helpful. I must say this might have been just one of my favorite interviews. We really appreciate your journey on the subscription economy, and thanks for your time at Shift Happens.
Thank you.
Thanks.
I enjoyed it.